Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv. So, recently there were 3 altcoin spot ETFs that I think were launched. Here I'm talking of Solana, Litecoin, and HBAR or Hedera. And those were launched in the US recently, in the last week or so. So, in this video, we want to explore what the impact of those spot ETFs is going to be to these 3 layer ones and which of these is actually going to benefit the most. That's what we want to cover in this video, because with these spot ETFs, it doesn't mean just because they all have spot ETF, they are going to benefit or gain adoption at the same rate. It's going to differ depending on what investors see in each of these and what partnerships are in place. That's the subject of this video. But before I proceed, guys, please know that I am not a financial advisor. If you do require financial advice, please approach someone who is actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes. That said, guys, if you're from the UK, please know that this content is not targeting UK audiences for obvious reasons. The UK authorities do deem anything crypto related to be extremely risky and they're trying to protect you. Let's jump back into the 3 spot ETFs that were launched for Solana and the Sol token, Litecoin and the LTC token, as well as HBAR for Hedera. And to kick us off, let's start by giving a brief description of each of these altcoins, their key strengths and their key risks. So kicking off with Solana. Solana is a high performance layer 1 blockchain built to deliver ultra fast, low-cost transactions for decentralized applications, DeFi, NFTs, and much more. Its architecture uses innovations like proof of history combined with proof of stake, enabling very high throughput and low fees. It has become one of the major smart contract chains, competing with the likes of Ethereum and Avalanche. Key strengths for Solana include the performance, developer ecosystem, and it's a large market cap altcoin. Key risks, well, there's one that is much talked about, which is the network outages in the past, some regulatory questions, even though at the moment there are no regulatory risks, but American administrations do change quite so often, so you never know what's going to come up when the next administration takes over. So that is always going to be a risk. Is it going to be reclassified as a security once more because it's an altcoin, it's not Bitcoin? You never know. Next, you got Litecoin, one of the oldest altcoins launched way back in 2011. It is essentially a fork of Bitcoin, tweaked for faster block times, approximately 2.5 minutes versus Bitcoin's 10 minutes, and also the benefit of lower fees. It is commonly referred to as the silver to Bitcoin's gold. Well, that was the older narrative. Is it still the same now? I don't think so. Key strengths for Litecoin include its long track record, broad recognition, a relatively simple model for payments and transactions, and key risks include fewer differentiators now compared to newer platforms. It has limited smart contract utility, and it may also be seen as a niche, so therefore it may not be able to adopt to gain from the wider adoption because it is such a niche product. The last one is Hedera and the HBAR token. Hedera is a public distributed ledger built on the hash graph consensus, not exactly a blockchain in the traditional sense. It is designed for enterprise grade use cases. You're talking of high throughput, 10,000 plus transactions per second as claimed by the Hedera team, low fees, tokenization of assets, digital identity, and so forth. It is governed by a council of major global organizations. Key strengths include enterprise positioning, tokenization of real-world assets, that's its focus, as well as differentiated technology, the hash graph. Key risks, you're talking of its less crypto-native hype, may struggle for mass retail traction, still early for many real-world pipelines. So what is the impact of spot ETF launches? Let's look at the potential and the implications here. When spot ETFs for these 3 altcoins hit the market, they saw approximately 65 million in trading volume on first day of launch, signaling a strong institutional and retail appetite beyond just speculative trading. In the next section of this video, we are going to be looking at how that interest might affect each altcoin. And guys, if you are not subscribed, please consider subscribing to our channel. We do rely on you guys passing the word so that we can grow our channel. And I also believe these 3 are not the only altcoin spot ETFs that are going to be launched in the near future. More layer 1s are lined up for more spot ETFs. So the impact of the launch of the spot ETF, starting with Solana, the launch of a spot ETF increases institutional accessibility. More investors, especially traditional ones, can gain exposure without directly buying or holding the Sol token itself or the Sol coin itself. That tends to raise demand. Solana already has a major ecosystem and large market cap, so the ETF gives a credible gateway for funds to enter. This could also boost valuation via increased flows, greater legitimacy, and broadened investor base. But the risks still remain. Because Solana already has high expectations, a failure of ecosystem events, for example, big outages or setbacks, could dampen momentum. So reliability is always going to remain an issue for Solana, even if it will never happen, it's always something investors are going to be considering because it has happened in recent times. Next, you got Litecoin, which is more of a payment transaction coin and less of a sophisticated DeFi smart contract token. A spot ETF can reignite interest, especially among more conservative crypto investors. You're talking of the old guard who actually understand the background and history of Litecoin. Because the LTC coin is widely known and has strong brand recognition, ETF access may reduce friction for investor exposure. However, the use case hasn't evolved as dramatically in recent years, so for the ETF to drive meaningful upside, there may need to be renewed narrative or utility improvements, for example, integration into payments. The risk is that the LTC coin price may react moderately, but not with explosive growth of more narrative-heavy chains. So it's all about the narrative, isn't it? And as for Hedera, the spot ETF gives the HBAR coin a significant legitimacy boost for a network positioned on enterprise tokenization, identity, a real-world asset on ramps. Having institutional investment channels is important. The combination of real-world asset tokenization plus ETF access is compelling. Institutions can invest in token and perhaps participate in infrastructure and utility indirectly. Because Hedera is less already priced in than the biggest altcoins like Solana and Litecoin, there may be more upside in terms of multiple expansion, but there are also risks to consider in this context, guys. Don't ever forget that. Hedera needs to show usage and adoption at scale. ETF access alone doesn't guarantee ecosystem growth. Also, the HBAR coin must be sufficiently liquid and widely accepted in the ETF context. So, which of these three altcoins from Litecoin, Solana, and Hedera, which one is actually going to benefit the most? I'm sure you already have a clue. So, in terms of potential alone, if I had to pick one, this is going to surprise a lot of people. I would lean towards Hedera and the HBAR coin, and here's why. It is a differentiated value proposition. You're talking of enterprise tokenization, distributed ledger plus council governance that is under leveraged in the market relative to its potential. The spot ETF represents a bridge between traditional finance and institutions and crypto infrastructure assets. Hedera may ride that bridge especially well because its use case aligns with institutional asset tokenization. Solana may already have much of the ETF expectation baked in. For example, it's a larger, more mature player. Litecoin may have less upside because its narrative is more static. You're talking of just payments and less growth oriented. So in relative terms, HBAR has more room to surprise with upside potential given institutional flows and utility alignment. Who was expecting that? I think most of you were actually expecting me to be saying Solana. But Solana, certain things have already been priced in because if they weren't, it would have gone up regardless of what the market was doing. So those are my thoughts, guys. Final thoughts on these three? Well, we are witnessing the ETF moment for altcoins, the day when the gate to Wall Street wings open and whispers of you can buy this token without wrestling wallets become real. For Sol, LTC, and HBAR, this is more than paperwork. It's a red carpet. For Solana, the carpet is already laid out, the crowd is lining up, and the address is known. If you have got a ticket, you're just stepping through the door. As for Litecoin, you may feel like a king re-entering the grand hall of crypto nostalgia. Familiar throne, less flashy, but still respected. However, for Hedera, this is the surprise VIP invite. A newer player promising big rooms, enterprise, and tokenization as examples, and this moment could accelerate its arrival. So if I were placing a bet, like I've already said, I would say HBAR's moment might come into sharper focus now. The stage is set. Whether the performance becomes a blockbuster depends on execution, but the door is open and HBAR has best odds of printing through. What are your thoughts, guys? Let us know in the comment section. At the moment, Sol I do hold in very small quantities. Litecoin, only when I'm trying to move funds quicker and cheaper to an extent. HBAR, currently I do not hold the HBAR token. What do you hold? Let us know in the comment section, and also share with us what you think the prospects for each of these respective altcoins is or is looking like, a future forecast that is. Let us know in the comment section. Until the next one, FD for H5.TV signing out on our bye.